Hi there, Kristin and Amanda here from Rise High Financial Solutions. We're coming to you today with a very common question that we're getting asked a lot at the moment by our clients, and that is, my fixed rate is expiring soon, and what can I do to prepare? What are my options here? So according to the Reserve Bank, there are around 880,000 fixed rate loans that are due to expire in 2023, and another 450,000 that are due to expire in 2024. So that's a lot of people coming off a really, really good fixed rate. So I think the main thing here is that people with fixed rates are really facing a big increase in their repayments when that fixed rate expires. And if you aren't prepared for that, it can come as quite a shock. So let's break down that question. Amanda, can you give our clients some hints and tips on what they can do in the months leading up to that fixed rate expiring?
Definitely. So the first tip is to understand what your repayments will jump up to. So most people will be coming off a fixed rate in the 2% and potentially jumping to a variable of 6%. So knowledge is the key. Get in touch with your broker and they can help.
Yep. We also have some really good online calculators that if you know the rough figures, you know what your amount outstanding is and you know your term that is remaining on that loan, you can possibly jump online the Rise High website, and we have some calculators in there so you can put the rate that you're going to and get a really rough idea yourself. But of course, your mortgage broker is always here to help you.
That's it. And definitely reduce your budget. Look at where you can reduce your expenses and start working on that so that helps you when your repayments go higher.
Yeah, absolutely. When you get that figure and you think, oh gosh, my repayments are going to go up by 200 or 400 or more per month, I guess sitting down, with your partner on your own, having a really good look through where your money's going.
That's right.
Are there things in there that potentially you can reduce or get rid of, or are there some areas where you think, oh gosh, maybe I don't need to go to the pub 3 times a week for dinner, I can just do it once.
And cut out those Uber Eats.
Cutting out those Uber Eats, we're all guilty of that one, absolutely. What else can we do?
We can also start paying a little bit extra now. So just start getting used to what your payments are going to go up to. Instead of paying the minimum, pay higher, get used to those new repayments.
Yeah, and I think one of the things to remember that, especially if you've got a fixed loan that's entirely fixed, some banks do have limitations on how much extra you can put into your fixed rate loan. So with some of them, say it's like $10,000 per year. So I guess if you are going to pay a little bit extra, you just need to be aware of what that additional amount is. Either contact your mortgage broker or it will be in your original loan documents as well.
That's right. And if you can't put it into that fixed loan, think about putting it in a savings account. Yeah. When it does come off fixed, you've got that backup money to help support you with those larger repayments.
Yeah, and you're used to the feel of what those repayments are going to be. So that's a really good idea. So I guess that's for the people that potentially have got a little bit of time up their sleeve before their fixed rate expires. How about those people who have a fixed rate expiring soon, in the next month or two? What are their options, I guess, for when that fixed rate does expire?
Yep. So the first one is to do nothing, which is the silly idea. Your bank will revert you to a much higher rate, and that's what they're hoping, that the client will be lazy and they'll just stay with them. They'll be paying more interest. So yes, definitely don't do nothing.
Yeah. So I guess if you are a Rise High client, we will have your fixed rate expiry dates in our diary so that you will get a call from one of us here in the team to at least get the discussion happening on what your options are. So option 1 is to do nothing, and that is something we do not recommend. So what else can clients do?
Yep, so if you're looking to stay with your existing lender, the best thing to do is contact their retention team and try and get the best rate possible with them and ensure they're giving you a competitive rate. So always have a comparison available, and we see clients opting for that option if they're super happy with that lender and all their banking's with them. Sometimes people do want to stay with that lender, so just make sure you're getting the best rate with them.
Yeah, so it can just be a quick phone call to the bank, or again, your mortgage broker can assist you to either make this phone call or do it on your behalf, depending on the lender. So I guess then you do have the option of either switching across to a variable rate and getting the best variable rate in the market, or you could look at fixing again. So this is something we've covered off in previous videos that we've done, and I guess we'll be popping a link to that in the notes for this video so that you can refer back to that. So we've got doing nothing, which you don't want to do.
Nope.
We've got potentially staying with your existing lender, but reviewing the rate and looking at the options. And what's the third thing that clients can do?
Refinancing. So that way you can have a full review of all your options, whether it be a fixed or a variable, but comparing all the lenders in the market. And that's something that your mortgage broker can definitely help you do, and make sure that you're getting the best rate possible.
Yeah, so the other thing I guess that we have floating around in the market at the moment is cashbacks as well.
Yes.
So can you explain a little bit about them?
Yeah, so some lenders will offer a cashback for you to refinance to them.
Yep.
And obviously that's a bit of an incentive. It can cover some of your fees and put a bit of cash in your pocket.
Yeah, that's always nice. So it's definitely worth, even if you are going to stay with your existing lender, just having a bit of a shop around. Your mortgage broker can help you with that, but understanding what other options are out there. I guess cashbacks are a big incentive, and you know, having $2,000 or $3,000 or $4,000 put in your bank account just for refinancing is a bonus. But I guess one of the things to remember there is that yes, the cashbacks are great, but sometimes the rate isn't always fantastic. So it's important to take into account what the rate will be in addition to that cashback that you could potentially be getting.
And making that comparison over a couple of years, which we can help you do as well, taking into account, the difference in the rate, the fees, and the difference with that cashback.
Yep, beautiful. So we hope that has taken away some of the, I guess, anxiety if you do have a fixed rate that's expiring in the coming months or weeks. Being in touch with your mortgage broker and understanding what your options are definitely the way to go. So yeah, we wish you all the best and get in touch if you need. Thanks.
Thank you. Bye.